Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for WealthPress. By the way, you could find these videos on wealthpress.com or rogerscott.com. I think they moved everything to rogerscott.com. And also, you could find them in the YouTube WealthPress channel where I post them daily. Now, here's your job. I make these videos just for you. Like them, subscribe to them, post comments, and review them, and give thumbs up. Subscribe to our channel and love our videos. Finally, today's the big day. Not for the market. I'm finally getting a haircut today. I got a thing going on in my head. I got to cut some of it short. It's about 8:07 in the morning. The market's going to gear up to open up in about an hour and 23 minutes. And as you can see here, the market is afraid of Powell. Powell speaking at 10 o'clock, and the market does not want to show its hand at all. I mean, it's actually kind of interesting. Looking at the bond market, which we'll look at right now for some guidance, which is what we really need to pay attention to. The bond market didn't really, it made a higher high, but noticed it closed a little lower. Let me change these charts to candlesticks so you could see better. But as you can see here, we made a higher high. I'm very skeptical that we're going to go higher. I'm starting to see a higher chance of us sitting around here than going higher because the Fed data is just not getting any better. But all in all, watch out for Powell, and more importantly, don't just watch out for don't just see what the market reacts to Powell. Pay attention to the words he uses. In other words, is he talking about things getting better? Is he talking about sitting for quite some time around this area? Is he talking about things getting worse? It'll be very interesting to see what he says and whether he echoes the rest of the Fed. The rest of the Fed has been actually kind of bearish lately. They've been talking about going to 0.50, and the bond market hasn't really bounced off. Look at how it bounced off here, right? Look at how it bounced off here. It still hasn't bounced off. Now, maybe the market is waiting for Powell today, but so far, looking at sectors, I'm not seeing it, and I'll tell you why. Technology's up here. Communication services is between materials and technology. Consumer discretionary is all the way up here. To me, this starting to look again like a fragmented market. And the only way fragmented markets get cured is by going down, not up. So I'm very, 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 very cautious. Another reason why I'm very cautious, and I'll show you why, is because momentum levels aren't that beautiful right now. For example, NASDAQ 100, 52% of stocks is trading above the 50-day moving average, 43% in the Dow. The Dow is practically bearish and only 55 above the 200-day. Things are just not looking all that great, and I'd love to tell you otherwise, but they're just not. 49% of stocks in the S&P. Now, interestingly, when you start looking at individual sectors on a graphic way, and I like to look at the high, open, low, close, industrial still looks like it's making higher highs, which is really great. I like energies, and energies is now the second strongest sector, and I like energies. Technologies, it had a chance to rally yesterday, and it closed literally at the lows. Basic materials closed at the lows, starting to get a little skeptical about basic materials. Healthcare, I don't know if this is the bottom or if we're going to go down for another wave down. I like consumer staples. I think consumer staples are more in the choppy. I like consumer staples and energies once again. Financials, I think, are going to do okay, but they're just kind of not here, not there right now. Utilities looks like they could start doing okay. Real estate doesn't, and consumer discretionary really doesn't. Now, consumer discretionary, I want to show you something on consumer discretionary. As you could see here, let me just change my chart and dump some of these indicators so you could see what I'm talking about in a much clearer way. But as you could see here, notice that comes out and then starts coming in, and it closed at the low. So to me, it looks like we're going to continue going down this channel. And if you look at communications, it doesn't look all that different. It huffed, it puffed, and it closed at the low. So I need to see some major upside at this point to be convinced that this market is moving in our direction, because I'm just not buying it. And technology, very much the same way. So look at that. That's a classic reversal sign right here. Closed up, went up, made it look like we're going to break out, and then closed all the way at the bottom. If this thing breaks the low, It's going to come right back down to here, which again is telling me, the sectors are telling me that's really what needs to happen. I'm not seeing a major rally on the way right now. I'm just not seeing it. The market is not setting itself up that way. On a totally different note, before I get into the nitty gritty, metals today, not today, this week, we did some seasonality, and we learned that this week is not a great week for gold, copper, and copper commodities. So we're actually short copper, and as you can see here, copper is opening a little lower. So there is a chance that copper and metals are going to go down. And I can't really say that's great or not for the market, but metals going down is something that could be in our cards for the remainder of this week, or at least the next few days. So keep an eye on that. Outside of Powell, we've got wholesale inventories. We got consumer credit, which isn't big. Tomorrow, Powell speaks again. We've got the ADP employment report. It'll be interesting to see if this reflects on what happens on Friday. And then you have international trade in goods and services. Again, that'll be really, really important. You've got the petroleum report. I like energies right now. I like them quite a bit. Now, let's talk a little bit about what to expect today. Market participants brace for Federal Reserve Chairman Jerome Powell congressional testimony. On Monday's session, stocks drifted to a mixed close, not really giving us anything, giving up most of their gains as the 10-year note rebounded from an early decline. When the yield rebounds, that means the note goes lower, the bond goes lower. Basic materials sector dropped the most after China set to its lowest growth target in over 30 years of around 5%. That's one of the reasons basic materials isn't doing all that great right now compared to industrial. Apple, they got upgraded. Goldman Sachs initiated coverage on the stock with a buy rating. That's really good for the market. And guess what? The market couldn't do anything with it. Let's see how Apple did, just out of curiosity. Did Apple also give up the ghost? Yeah. Apple closed at the low, and this is after an upgrade. Sure, it gapped, and it went to 156, but it closed at 153.85. So just not seeing a lot of love there. Let's take a look here. What else we got? Merck rose 3%, was the top percentage gainer out of the Dow stocks as Jefferies initiated buy rating on the stock and named it top company in its pharma pick. I like Merck. I like healthcare stocks right now. Not so sure about the sector as a whole. And I'll tell you something else. Right now is not the time to be sector specific. Right now we have to be stock specific. So you could have a stock like Progressive. It's an insurance stock. Financial stocks haven't been doing amazing. Progressive has been doing great. Same thing with Borg Warner. So we have to look at stocks, not the individual sectors, because there are specific stocks in every sector that are doing really great. And one of the sectors that's doing great as a whole is the gambling sector, because we haven't heard anything negative about COVID from China. On the economic front, U.S. factory orders fell less than the 1.6%, weighted down by a drop in civilian aircraft bookings. Data from Commerce Department showed yesterday. The Commerce Department report also showed increase in orders for machinery and other products, pointing to some rebound in manufacturing. That's why I like industrial manufacturing a lot more than tech, and it doesn't have as much of a negative correlation with the interest rates either. Today we're all looking at Mr. Jerome. I'm not going to be honest with you till you reappoint me, Powell, on his semi-annual monetary policy Senate. And everybody knows that he's a wet blanket, and we got to be very, 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 very carefully. Now, is he going to be talking about the same thing? Like, for example, Fed Jerome Powell to Congress. Australian Bank Chief Robert Halsman, hawkish member of the European Central Bank's Government Council, said Monday that ECB should lift rates by 50 basis points at each of its next 4 meetings. So I don't know what Powell's going to say, but he's like a wild card. You just don't know what he's going to be talking about. China closed lower after the country's new foreign minister said relations with the U.S. have left a sour note, a rational path, and warned of conflict if Washington does not hit the brake. Please, take it easy, buddy. Take it easy. You need us more than we need you. Data on Tuesday showed the country logged a record trade surplus in February, driven by smaller than expected drop in exports. Weaker than expected GDP forecast for the year bolstered some concerns that their recovery is not moving as fast. With that said, keep an eye the next few days on gambling stocks because they've been on a roll. MGM, Wynn, Sands, they get a lot of money from China. I'm not discriminating. I mean, that's part of their like report. They focus on China. So the fact that we're not hearing the word COVID in my morning report now for a couple of months is really good. At the same time, the Nikkei stock index closed higher after data showed wage growth and the country fell more than anticipated. As far as stocks that are going to be in the news today, Sea Limited, one of my favorite stocks during the bull phase of the market a couple of years back, and CrowdStrike are reporting. Outside of that, there's just not much more in earnings. And that means there's not a major catalyst for the market. Not saying that earnings gave us anything really that big. It was actually kind of disappointing, really disappointing. EPS went like this, from 2% to 9% negative over a year. Now, today we talk about strongest sector, strongest stock, weakest sector, weakest stock. Now, as I said, right now we got to be really careful because there are some stocks in technology, energy, and industrial that are just doing really, really well. And there are some stocks in real estate that are doing, like Pulte Homes. We're long Pulte Homes right now in one of our programs. It's a real estate stock. It's doing really well. So you got to look at the individual stock more than the sectors right now. The sectors can get a little wonky. But if we're going to be looking at stocks, let's just kind of quickly take a look and see what we're looking at. And I'll tell you, Steel Dynamics is looking great right now. Lamb Weston is looking good right now. Las Vegas Sands, I'd be careful with the China in the last few days. But honestly, I like Marathon Petroleum, energy. I like Steel Dynamics, and I think Steel Dynamics, let's see, is it a industrial stock? Let me just make sure I'm not crazy. Weirder things have happened. Material, basic material, yeah. Producer, steel, all that stuff. I like that. I like those stocks right now. So Steel Dynamics is definitely the stock you want. So here are my top three, okay? Steel Dynamics, Lamb Weston, and Marathon Petroleum. I like Marathon Petroleum, and the fact that it's almost at all-time highs it says quite a lot. Now, we've got to be really careful. Another one I really like is United Rentals. So let me give you a couple. United Rentals, Marathon Petroleum, Steel Dynamics, and Lamb Weston. See, I gave you four. Now, in terms of crappy stocks, oh boy. Here's a perfect example. Lamb Weston, healthcare stock, great stock. Bristol Myers, no. Bristol Myers, definitely a sell stock. Tyson Foods, definitely a sell stock. Those two. Now, let me show you, let's see if there's any love with Dish. If it's almost time to sell Dish again. No, it's at the bottom. I was hoping it was up here so we can go ahead and sell it. I guess we have to wait for a little rally. Sell the stock every chance you get. It's always on my crap list, all right? Now, before I let you go, folks, I need to tell you something really important. A perfect storm is brewing right now. Stocks are beginning to tick higher. Some stocks. That's why I say right now we got to look at individual stocks, not just at sectors. Rate hikes are starting to possibly slow down. Let's see what Mr. Jerome, Powell says. And there's a ton of money sitting on the sidelines. Now, this could trigger a profit surge like of which we haven't seen in a long time, sending a handful of stocks jumping higher within the weeks. I'm very excited about this. I'm actually starting to talk about airline stocks again, casino stocks. We're not all, let me show you this. Remember, it was all energies? All energies a year ago. Look. Let me go back 6 months. Devon, Industrial, Marathon, Conoco, Marathon, Exxon. Not anymore. Look at this. You got Wynn. You've got Grainger, you got Procter & Gamble, Cardinal Health. It's not all energies. Ulta Beauty, huh? So, folks, things are surging, and this could trigger a profit surge like we haven't seen before. Want to know where the money's going? Want to see how it's going to end up? Click the link below. Watch my free presentation. I'm going to teach you exactly how I isolate these players, and I'm going to give you some factors that I use to show you which stocks I'm targeting. I always tell people this. Half the challenge. I don't care what strategy you use. I really don't. Half the battle is picking the right stock. If you can pick the right stock, 50% of the problem is there already. It'll make any strategy much, much more effective. So learn how to pick the right strategy and how to isolate these amazing stocks. You don't want to miss out. Follow the link below. Check out this presentation. You're going to absolutely love it, and love it some more. And remember, watch my channel, subscribe to my video, like the video, and post comments there, and I will respond. I will. I promise I will. You guys have a great day, and I'll see you later. Bye.